السلام عليكم ورحمة الله وبركاته. بسم الله الرحمن الرحيم. الحمد لله رب العالمين والصلاة والسلام على النبي الأمين وعلى آله وصحبه أجمعين والتابعين لهم بإحسان إلى يوم الدين. Welcome back our weekly lecture, and on behalf of Islamic Economics Association of Kuwait University, I would like to once again welcome you all to our 2 days session entitled Overview of Cross-Border Payments Business Models. Nadi al-Iqtisad al-Islami of Kuwait University is a global platform and is becoming a hub for promoting Sharia-compliant finance models, strategies, policies, Sharia standards, and also to promote globally Islamic banking and finance models by conducting talks, lectures, conferences, seminars, and also it's a platform to facilitate researchers, students, and teachers of these fields of Islamic banking and finance by giving them opportunities to attend the training and workshops. And we are also trying to conduct various types of lectures which usually cover a wide range of areas in this Islamic banking and finance. And today, our topic is overview of cross-border payments business models, which will be conducted by a prominent expert and consultant, Mr. Lokesh Gupta, who is the co-founder of CTU and RM Applications SDN, Berhad, Kuala Lumpur, Malaysia. Mr. Lokesh is actively involved in various projects undertaken by FIS in the area of risk management, Basel compliance, asset liability management, and treasury. Being part of RMA, the involvement is largely in the area of OmniRemit remittance solution, OmniData Mart, and vehicle inspection management solution, project management, interface development for core systems, ETL, tailored data mart development, and report development for various conventional and Islamic financial institutions in Southeast Asia. He is a project management and domain consultant for development and implementation of OmniRemit. It is an electronic remittance solution for branch, agent, and online remittance integrated with MoneyGram and other recognized corridors in Southeast Asia to perform online debit and real-time remittance to Indonesia, India, Sri Lanka, Philippines, and Bangladesh. The solution supports P2P, B2B, B2I remittance, including inbound and outbound remittance. The solution is in compliance with the Central Bank of Malaysia, Bank Negara requirement. So this is an honor to welcome Mr. Lokesh to conduct today's session entitled Overview of Cross-Border Payments Business Models. Please welcome.
Thank you, Dr. Mohideen. Thanks a lot for the introduction as well. So, hi, everyone. I think today, maybe let me see if I can switch off my camera. So easier for people to see me who I am.
Yes,
okay.
Sure.
So I think it will be good. So, okay. Hi, and welcome everyone to this session. So I think today's session is very close to my heart because I think as Dr. Mohideen, when he presented my brief introduction, I'm attached to RM Application as a co-founder, and my company where I'm attached to, we basically specialize in the area of remittance. So today my session, or the objective of this session will be is maybe to share some knowledge, and maybe some of you may be from the payments background, and maybe some of you may not be. So I'll try to go in a very basic or layman perspective. Normally, and this question always comes to, hey, how is this remittance being performed? What exactly is this remittance? So today, basically, I'll be trying to cover these few questions and maybe trying to share a little bit on the different business models. Of course, the remittance is a very dynamic industry. I'm sure, as you may know, like since Dr. Mohideen also is from Kuwait, there are a lot of migrant workers who may be coming to the Middle East to, for earning their livings and all. And then end of the day, they're sending money back home. So how they send, they may be taking, so today's presentation will be talking about how what happens from the system perspective or from the business model perspective when somebody is trying to send money, let's say from Kuwait to Bangladesh or to Nepal to India. So today's my presentation will be covering this particular part, and of course, questions are most welcome. If anybody has any kind of queries or anywhere you think you need some clarification, you can raise your question maybe at the end of the session, and I'll try to answer your queries as well. So, Dr. Mohideen, will you be sharing the slides? Okay, thank you. So, okay, so let's start with the topic as I mentioned. So first thing it is, the very first question which people, the thing come into mind is, what is remittance? So remittance, when we talk about it, of course, end of the day, it's a payment which is a cross-border payments normally, okay? So we're talking about over here is a sender who is sending money to a receiver. In the normal payment as well, we also have a sender and receiver. The only difference when we talk about remittance is basically remittance is largely attached to the migrant workers, or we talk about the migrants who have come from different countries, to do some work, to earn for their living. And what the objective from them is to send the money back home. So when they're sending money back home, it's basically money back home to their parents, to their family, to their wife, to their kids, So basically they can take care of their day-to-day needs. So they come down, for example, let's say I gave example of Kuwait. So a lot of migrant workers come there, maybe in the area of maybe in the construction, maybe in the area of service sector. So they perform their so-called their work and all, whatever they get their salary paid. And most of them normally they try to send at least 80% or 70% of their earning back home for their own family. So that's how we categorize into two sections or two parts to it, one or two entities over here or two individuals, you can call it. We also talk about peer-to-peer as well. So we're talking about sender and receiver. So when I'm talking about sender is basically, as I mentioned about a migrant worker, it could be even anybody, could be maid, or it could be even expats. So doesn't mean we're only talking about the migrant workers over here. It means anybody who want to send money across border. So basically their needs are basically what they're looking for when they're looking for remittance services. They're looking for somebody who they can trust. Normally, the remittance is not, of course, the banks do offer this service, but most of these workers, because they have a challenge maybe on the communication, or maybe they can't speak the local language, or maybe they need somebody who can speak their own country language, or maybe they are not that elite, maybe the education level is not that high where they can fill in the forms. So normally they'll try to shy away from the formal financial institutions. They like to go to the other so-called remittance house, maybe like, I'm sure you may have heard of name like Western Union, MoneyGram. So they like to go to those agents or outlets where they can have a little bit of custom, or maybe the customized services or the tailor services, where maybe somebody is helping them in their own home country language to fill in the form, and so they can send money. So they're looking for basically trust, a convenience, means they can send money at any time, minimal paperwork. One of the main challenges, they may not be that much, the literacy level is not that high. So they need somebody to assist them on filling in the so-called information or papers as well. And of course, for them, every single cent counts. So they want to go for a service which is low cost. And again, the main thing it is they want to make sure the payment reaches to their family or to the to the beneficiary as soon as possible. Could be real time, means when I say real time means immediately, maybe 5 minutes, 10 minutes. Even the expectation is very high these days. Or sometimes it could be even one day, depends upon the country to country. And then of course the customer service, in case if the money doesn't receive, so they have somebody to talk to understand, hey, what happened, why the money did not receive. So these are basically the expectation basically from the sender side. On the other side, we have the receiver, which are basically, as I said, they're coming from emerging market. So emerging market, when we talk about is, of course, largely from Southeast Asia or South Asia. For example, we can talk about Bangladesh, Nepal, India, Philippines, so these are the countries from where a lot of migrant workers who move from those countries to the to the basically to the so-called developed country, and also they can earn more and then they can send back money to their family members. And of course, we're talking about the family living in the home country. So for them, the receiver also have their needs. They want the funds to be available quickly, and again, convenience on receiving, because sometimes even for the receiver as well, they may not have accounts. Of course, we all know that as of now, not 100% of the population will have the accounts open with the bank. So maybe they're still living on cash, even if the wallet has increased, but still quite fair bit of population still are deprived from those kind of financial services. So they may be still living in the world where actually they use cash as a mode of payment and cash as a receiving as well. They also don't want to go through many paperwork when they're going for collection of the funds, or when the funds are credited to their accounts. And again, no fees. I mean, they should not be charged. Whatever the charges should happen basically at the sender side, not at the receiver side. And of course, same thing is their expectation also is customer service. In case they want to have any query, then they can call that particular customer service center to get the information. Okay, hey, what happened to my payment? So this is basically largely the expectation, or the how the market basically, or the need, okay, or the ask from the customer. So this particular segment is the most heavy segment when we talk about remittance, and we're talking about peer-to-peer. So this is basically more towards peer-to-peer also, we call it. It's like individual to individual. Of course, it could be from sender to the receiver, to their own family members. Can we go to the next slide? Okay, so basically from the peer-to-peer, so like as I mentioned, right, so there are two kind of models, or two kind of, I can split into two, classify into two kind of payments, or remittance I can call it. One is the peer-to-peer. So peer-to-peer means I'm sending to one-to-one to other, from one individual to another individual. It could be a migrant worker who's sending money back to his family. It could be an expatriate who's sending also money back to his family member as well. Could be knowledge workers, could be embassy staff, could be shipping. And now we are talking about even the travelers as well. We're also talking about even the medical tourism as well. So the peer-to-peer segment is increasing quite extensively. And even now there's a new phrase which is coming up, is called digital nomad. For example, the workers who may be just moving from country A to country B because they can work from home. So irrespective of the geography location. So they're also coming into this P2P segment where they need the funds to be credited to their accounts, or maybe to the wallet, or they can get it in the form of a cash, which they can use in the country wherever they are. As you know, the digital nomad is picking up across the world, even from Europe to the Southeast Asia, everywhere. Now there's a special visa for the digital nomads, Then the next segment, which is, we call it is the B2B segment. This is the most upcoming segment because peer-to-peer is there from quite long, and the market is getting very competitive and crowded. But when it comes to business, means a company is making a payment to a company or to an individual. This segment also is now trying to shy away from the formal financial institution. They're trying to also use different kind of other option available for them, which they can also use it as a mode of payment for the cross-border. It could be the payments to any other corporates or to the SMEs from where they're buying any goods for import-export, or it could be even, for example, as you know, right, as I mentioned about digital nomad as well, from the payroll perspective, they also can credit to their workers who may be working in overseas, or maybe for their allowances, etc. So there's a payroll need as well, where actually the company may be based out of, let's say, from Kuwait, but again, they're making payment to their staff who may be working in the Southeast Asia, maybe in other part of the world. So this is another segment which is now picking up. And these two are the segments which are really driving the remittance market. As you can know that there are a lot of now more and more sophisticated remittance players are coming into the market. Go to the next slide, please. Okay. So basically we're talking about, there are three kinds of models, and I just try to, at a very high level, I can say, okay. So the very first is we're talking about is the correspondent banking. So when I talk about the correspondent banking, is basically, this is one of the most traditional method which is being followed. And we are using, I'm sure most of you may have heard of it, SWIFT, or maybe, if you go to the bank, when you want to send money overseas, we always say TT, telegraphic transfer. So that's where the SWIFT come and play a role over here, where normally the banks, they have connected to globally to other banks using SWIFT network to send money from their bank to the bank in maybe across the world. I will show it to you in my next slide how this particular model works. So this particular model is very much so-called popular among the financial institutions, which is like your banks and everything. So they are the one who are basically practicing this model. And then on the other side, we also have, and its particular model is practiced for both the individual and corporate. So we're talking about, I just now mentioned about a segment, which is again the P2P and the B2B segment. So this is the one of the most traditional and the conventional way of doing the remittance and still definitely is still practiced, no doubt about it. And then we talked about the second model is MTO model. So MTO model is called money transfer operator model. So this model is, I'm sure you have heard these names, which is very prominent, like Western Union, MoneyGram, RIA. So these are the names which are quite popular because these companies or these MTOs, they have expanded their network globally. So where actually they can send money from point A to point B in the real time. And the point A to point B, it could be in the form of a cash pickup, it could be in the form of a direct credit to the bank account, or even now we're talking about wallet, crediting to the wallet, etc. So these guys, they basically leverage on their own network. So they have appointed their own agents, they're connected to the banks. Some countries, they even connected to the ATM network as well, where actually you can use ATM to even withdraw the money. So the idea is to provide convenience. So as you can see, the difference between the correspondent banking and the MTO model is straightway trying to target is the remittance segment, which is the sender and receiver or the P2P segment, where the convenience plays the major role. So how they perform a convenience, also how they offer a convenience is by having the network, which is globally. And again, this transaction are processed instantaneously most of the time. And this is one of the most popular model, which is being practiced at present in the market. And so this one, I will not say that it is not practiced among financial institutions, but it's more towards, like we call it money transfer operators, or we also call them money services business operators, which the name may differ country to country. For example, in Malaysia, we call them as money service business providers, So the name is different, but end of the day, they are also regulated by the central bank. Okay, but they may not be a bank. So they are more like a financial institution, or we call them non-banking financial institutions. Then the third category, which is coming up, which is the fintech driven, I can say in that manner, which is towards digital remittance. So the fintech driven is also basically they're leveraging on the MTO model. So the MTO model is a brick and mortar based model, means it's still working on the model of branch and agent, means you go and perform the transaction physically. Of course, some of them have gone into hybrid. So, but still MTO model definitely will have the existence of branch. So they may have a touch point like branch, agents, and basically the digital channel could be online or mobile. But digital remittance is exclusively only digital. For example, I'm sure you may know this company like Wise or Remitly. So these companies, they're only offering digital services. They don't have any branch. They just offer you a mobile app. You can download the mobile app and you just, whichever country they got approval or got regulated by the so-called the respective central bank. So they can offer this app. Customer can just register on the app and then they can start sending money. So of course, they also follow all the anti-money laundering guidelines and etc., etc. But the only difference is they will not have any physical branch. They will have a call center, contact center and everything, but not a physical branch. Okay. And normally they provide a cashless remittance model. So as you know, right, in the normal model of remittances, you give cash, physical cash, and then they send it out to the other country, to the so-called home country of the beneficiary. But in case of digital, it's only cashless model. So means the cash also is either directly debited from the bank account or maybe from the wallet, and then it's being sent to the respective country, again in the form of digital. But of course, from the receiving country, still you have an option where they can define whether it is you want to credit into the wallet or credit into the bank, or maybe you can also opt for a cash pickup, means somebody can deliver, or you can go and pick up the cash from the respective agent. So they also leverage on the MTO network, as I mentioned. So these, the only thing it is, when it comes to digital remittance, they're offering a convenience. And it's largely, of course, the target segment within the P2P is still the migrant workers, but also the expats or even the locals where actually they are using this kind of channel to make payment for their kids, let's say maybe for university fees, or maybe for the employers who are making payment for the maids. Yeah. So this is basically the SWIFT model, what we have. So I think I will go in a very high level manner. So simply is, as you can see, I've tried to put down the step one by one over here. So first thing it is, any sender, he goes to the bank. Okay, SWIFT model, just for understanding, it is only practiced largely in the banking or financial institution. You go to the XYZ bank. When you go to the bank, you go and say, I want to send money, let's say to Nepal or to India. They will take your documents. They will do the screening on your name because they have to follow the AMLA. When I say screening means they check it out whether is there any kind of sanctions against your name or any kind of red alert has been on the name, because you any kind of maybe the person is involved in any kind of terrorism or terrorist or any money laundering activities. So the name are flagged. So by right, when you're doing a remittance, those if anybody name is flagged, they're not supposed to do it. They're not allowed to do any remittance. It is supposed to be reported to the central bank of them under, we call it suspicious transaction reporting. Then we have, of course, if the customer has gone through the screening, all okay, then they will basically send the transaction or information by SWIFT message to a SWIFT network. Normally, the financial institution may have a correspondent bank. So they will have a bank A, okay, but they may not have correspondent bank across all the banks within, let's say, for example, if somebody is sending money from Kuwait to Malaysia, the bank will not have correspondent bank so-called arrangement with all the banks in Malaysia. They will have only with one or two. So they basically will send a message to their correspondent bank, let's say the Citibank over here. Then Citibank will have arrangement with other local banks over here to process the payment. And then the payment will basically from there, they will issue a confirmation number, which is the step number 4. Okay. And once the confirmation is there, then the sender will have a receipt saying that fine, we're sending this much amount. The beneficiary will receive this much of amount in the local currency or maybe in the US dollars. Okay. And then this particular information, the sender will send it to the receiver. And normally this is how it happens, right? When I send money, let's say to my parents or to anyone, immediately I'll tell them, hey, I already initiated transfer. The money will come in. Okay. Then on the other side, from the SWIFT point of view, they will initiate, basically the correspondent bank will make a payment to the correspondent bank. Then the correspondent bank will process the payment to the beneficiary's bank account. The bank account will get created and the confirmation will receive to the SWIFT network. And then at the final stage, the message will be basically to the sender saying that fine, the whole transaction has been completed under the credit confirmation. So this is normally the flow which is being practiced under SWIFT, okay, which is largely practiced by the financial institutions, okay. So the model is almost more or less the same. There could be the number of steps may increase, and normally under this model, by and large, it's always a direct credit, we're actually sending money directly to the bank account. You don't have any option for cash pickup, means the beneficiary cannot come to the bank and collect the money physically, So normally they will credit to their account. That's how the SWIFT network is being used. Okay. Now let's go to the next one. So next model is a money transfer operator. Now, as you can see, if you see from the number of steps point of view also, it's slightly lesser and it's more cleaner. Okay. So the idea is because you're looking for a speed. Okay. So now what actually happened is, so now this model is called as money transfer operator. So under the money transfer operator, instead of financial institution, we're talking about either the operator's branch or maybe the operator's agent, which could be anyone, depends upon each country has their own ruling for who can be the agent or who can open a branch, based on the regulators' so-called requirement. So the customer can, the sender can walk into the branch, pass the cash, and then basically the money transfer operator will do the same kind of screening and everything. They also have to comply with the requirement as per the central bank. They can't be as the same as financial institution. They perform the screening, all okay. Then they basically get they accept the transaction. They issue the receipt, like for example, the step number 5. Then from there, the money transfer operator will already have other so-called within their network, so they are also their own agents, which they will be using. From there, what they will be doing is they're sending money digitally because they also will have opened some accounts with them, okay, like the same kind of Nostro. So they will be sending the money immediately to them. Once they receive the so-called transaction information, based on the transaction, they will be basically either crediting to because this one is a cash pickup model. So what's going to happen is the customer will basically go to the agent's outlet. Okay. And once they reach the outlet, they basically will give the number, because in the model of cash pickup, you have something called MTC, and we call it money transfer control number, which is very much coming from the Western Union model. So basically, you take the receipt number, go to the agent will validate the number. If the number is good, all good, then basically they will basically release the cash to the receiver. So this is how it's being done when it comes to the money transfer operator model, when it comes to the cash pickup. So this is what I've tried to explain in this particular so-called workflow or the process flow over here. So the good thing over here is basically it all working on the agent model. And all the agents in this model are all regulated by the respective regulators. So it's still the same thing. It just, you can say the SWIFT is a centralized model, or basically is owned by a single entity. Money transfer operator model could be you have option to connect with as many agents as you want. So normally each money transfer operator will tie up with many agents, or they can use payment aggregators, or third parties, just to make sure the payment can be processed. The good part is normally this kind of model, the speed is there, the convenience is there. And that's where when it comes to the P2P remittance, the sender or the beneficiary, they basically like this model a lot, especially for country like, not to say, like where the cash is still the king, or cash is still being practiced heavily, like for example, like Nepal, Bangladesh, although in all these countries, or even in India as well, although in these countries, the wallet is picking up, but still when it comes to the remittance, because they have more comfort level with the cash pickup, because they can see the physical cash. Okay, go to the next slide. So Mohidin, can you please move to the next slide? Yeah, thank you. Yeah. So this one is basically the similar model, is direct credit to the bank. The only difference over here is we are not doing any kind of cash delivery over here. The only difference is over here, the funds are being credited directly into the bank account. Okay, so as you can see, it's the same thing. I will not go through the process flow. So the only change is over here, the receiver need not to go to the agent. Automatically, the fund will be credited to his bank account, okay, by using the payment exchange. But again, the responsibility of executing everything is still with the money transfer operator, and the flow is still the same. Okay, we can move to the next slide. Of course, after the session, the slides will be shared with you, so you can go through the flow in detail. Yeah. So basically, if you look into the process point of view, I can just split into like few key steps over here. The sender comes, it goes to the sending agent or to the branch. Okay. They basically send MTO, sending country. For example, let's say we're talking about sending agent, MTO is within Kuwait. Okay. Let's say receiving country and disbursing agent is in Malaysia or maybe India or maybe Nepal, and then based on the receiver, he will get the payment. So that there are many models available. Of course, I did not touch base on the mobile money. So mobile money also is a similar kind of model where the money is basically credited into the mobile. Basically where actually we are taking using a mobile wallet to initiate the transfer. Okay. So these are prominently or predominantly the three key models, but of course models are evolving. Let me be very honest, because of a lot of fintechs, a lot of institutions, they're trying to see how to minimize the steps or how to minimize the process, so that they can send the money transaction immediately, and how to cut the intermediaries, because more and more intermediaries or the agents are involved, the cost of transaction will be higher. So the idea is to connect directly to as many banks or as many aggregators or as many agents possible directly, where you can perform the remittance and you can make the payment to the beneficiary, and you can do the direct settlement. The more you can do direct settlement, the better advantage to the MTO, because he can get a better rates, and then he can also result into the better cost as well. Mr. Mohidin, I think somehow the slide is not being. Mr. Mohidin, I can't see the slides now. Mr. Mohidin, are there?
Sorry, yeah, I got a little problem in internet, I think.
Oh, sure. Then fine. Yeah. Okay, now I can see. Yes, thank you. Maybe I'll stop my video because sometimes, because of bandwidth as well. Okay, so we can go to the next slide. Okay, So basically the challenges, or I will not say challenges, so like each, as I said, that there are definitely many models. So each model has its pros and cons kind of thing. So let's talk about the first model, which is normally the correspondent banking driven platform. Normally the fee can range, okay, not maybe US dollars 10, maybe it can be range from US dollars 7 to 8, minimum, and then it can go up to 35 US dollars, depend upon the amount and everything. And then possibly their lending charges. So what are these lending charges? So what actually happened is, if I'm sending money, let's say from Malaysia to Kuwait, what they will do, the banks normally do is, or basically because the model is such, where they will charge you the sending fees. For example, if I'm sending from here, they charge me 10 US dollars, But what's going to happen is, my beneficiary in Kuwait, when he receives the funds, they will also charge some fee to my beneficiary as well. So that's called lending charges. So that lending charges are being imposed by the bank who is processing the payment in Kuwait normally. So that's called lending charges. So normally when it comes to this kind of model, so you will have so-called higher exchange. The rates may not be that excellent. So normally there's a quite heavy margin on the FX rate bips point. And again, the transaction point of view, you can see the charges are high. Normally it can take easily around 2 to 3 working days to process this kind of payment. But again, sometimes it can happen is like it can take more than even 4 to 5 days as well, depends upon the bank, because banks want to hold the funds so that they can because for them they can earn some interest on it when they're holding the fund. So it depends upon the bank to bank as well. So that's why this particular model is losing its so-called attractiveness on the basically on the pricing point of view, and also on the speed point of view. That's where this MTO driven model came into the picture, where actually, as you can see, the pricing even can range from US dollars, one as well, depends upon the amount. Let's say if you're sending only 100 US dollars, they may only charge you 1 US dollars. So which makes very convenient and very much affordable for the migrant workers, And then of course, the exchange rate markup is not that high because it's a very competitive market and there are many players in the market. So it's all about the volume game over there. So being a volume game over there, so they basically use this exchange rate. So they have to make less margin on the exchange rate. Normally, the service is actually real time these days, no more 1 to 2 days, but still I can say the maximum is 1 to 2 days of working days. It kind of depends upon it for processing the payment. Normally, it's very much real time these days, but especially on the weekends, of course, there could be possible delays. And digital remittance model is no different from the MTO model. So it's also the pricing is almost the same. And again, because it's all digital, so they are in a better position to offer better competitive rates and better charges because they don't have cost for the branches. So there's no charges or there's no capex, or so they only have opex involved. And again, the digital remittance, as I said, they're also still using the MTO kind of network. So the processing time is almost similar to the MTO, which is almost like real time or could be average 1 to 2 working days. So as you can see, the model point of view. So when it looks to the attractiveness, of course, MTO and digital remittance model is being preferred. As I mentioned in my initial presentation, in the beginning of the presentation. Now, this model is not only practiced only from the P2P, which is peer-to-peer, but now it's taking, there's a lot of attraction happening from the B2B segment as well, because companies or SMEs, they want to save cost, and they want to make a payment process faster. So who doesn't want to save money? So even the SMEs especially are onboarding onto this kind of MTO or digital platform to perform payments as well. Yeah, please go to the next slide. Okay, this particular slide is slightly old. I apologize for it. But again, I think the statistics is still not far. On an average, it's understood in the market, if we look into it, right, the transaction cost is roughly around ranging from around 5% of the so-called the remittance transaction value, which is slightly on the higher side. So normally, as part of the goal, which is most of the countries now they're trying to reach is to bring it down to 3 to 2%, because end of the day, they want to make sure the migrant workers or the sender has some cost advantage, has some cost benefit, and also some value add for him by reducing the cost for processing this remittance. So this slide is slightly old, but again, end of the day, the factors which basically add on to the cost is like just now, if you may remember, I mentioned about the agent network. So more and more intermediaries are involved. End of the day, the cost will become higher. Okay, and of course, if you're offering a brick and mortar based remittance, so you have additional cost of your the branches, the agents, which could be rental, which could be the staff, servicing staff and all. So these are all also add on to the cost as well. Then again, I mentioned about multiple layer of agents. Then of course, there's a lack of awareness amongst, because sometimes it all depends upon the competition as well. Sometimes the same MTO may be charging more charges because maybe nearby his location, there is no other competitor over there. Okay, and the sender is not aware of it, so he may end up paying more charges for it. So normally, as I said, right, but again, the cost is high when it comes to the cash pickup, but when it comes to the direct credit, where actually the money is being credited into the customer's bank account or to the wallet, the charges are slightly on the lower side, definitely. So I don't have the latest statistic, but normally it can range around 2 to 3% of it. Okay, can we go to the next slide? Okay, so now this is something which is a little bit under debate as well. But again, I'm talking about from the remittance model, which of course most of us we are aware of it, where the remittance platform is being using the digital currency or basically digital assets, or we talk about the cryptocurrency, where we're talking about a blockchain-based remittance model, which has taken a quite good shape in the market on the requirement point of view. So this is basically on the blockchain-based model, where actually end of the day, what's happening is you have two different kind of cryptocurrency wallet, and you're able to transfer money from one wallet to another wallet, and then you can perform the remittance over there. So this is talking about from the cryptocurrency point of view. It's almost the same thing, but the only thing it is there is no fiat currency involved. Okay, but of course, to buy the cryptocurrency, there may be fiat currency involved. Okay. And the model or the platform basically allows you to convert your crypto into the fiat, and also from fiat into the crypto, vice versa. This model is still there, but however, because of volatility or high volatility in the crypto, people are shying away from this model. Okay, but still, it's still being practiced quite widely in the market, and it's being accepted as well. Okay, go to the next slide. Okay. So basically, I just given some example. This may not be the latest example, but again, there are many so-called remittance platform which is using the Bitcoin or the cryptocurrency like Spark, Coins, Rebate, BitPesa. Then we have Polynex. There are many other platforms which has come in. So these are platforms who are providing this kind of services. Some of them they claim they are providing with a zero processing fees, but end of the day, there will be definitely the currency volatility is there. So what they're doing is basically they're taking one currency to another currency and transferring it to the wallet. That's all. However, when you're trying to convert the crypto into the fiat, they depend upon their own charges and depend upon the exchange rate. And again, there could be some other charges involved for conversion. Okay, next slide, please. So basically, people, because when it comes to the cryptocurrency-based remittance platform, it is something which which most of the industry players think that can help in the P2P transaction, because end of the day, we're talking about wallet to wallet. So it can also address the real time, because everything is happening on the real time. The transaction can be cheaper from 1 to 3% as well. And the good thing it's secured. And again, because everything is happening over the blockchain, so there's a trail over there, so everybody can go and audit and can also verify and validate. Okay, and then again, this is basically we are talking about from the centralized to a decentralized network, which is definitely is considered as more secure and more transparent and more trustworthy. So this kind of platform also is being acknowledged and being accepted and adapted in the market quite fast. But of course, now with the cryptocurrency a little bit having its own downturn because of the volatility and all. So these kind of platforms are still there, but again, not that hype as it used to be earlier. Okay, can you go to the next slide? Okay, so since we're talking about Islamic finance, so I just thought maybe I can put this one of the slide which can talk about, because where there has been a lot of debate, a lot of argument, and there have been a lot of research being going on usage of cryptocurrency. Of course, blockchain definitely is permissible. There is nothing wrong about it because it's just a technology. But of course, when it comes to cryptocurrency, there are concerns, there are arguments because of the uncertainty and the speculative portion which is involved, which is we talk about Garar and Kima, which is there. But of course, some of the countries, like for example, as we all know that Dubai has been very much in advanced stage where actually they're talking about accepting the cryptocurrency, and they have been promoting a lot, And again, there are some studies have been done as well where they say that fine, the Bitcoin can be qualified as Islamic money unless the local government or the local regulator does not accept it as a digital currency. So these are some of the findings which has been there on where I got it from the secondary source only, which is published on the internet and all, where they talk about, okay, fine, whether the Bitcoin or basically the cryptocurrency or the Bitcoin can be used for Islamic finance perspective or not. Okay, so as I said, there is a mixed opinion, some acceptable, some not acceptable, some acceptable with some caveats over there. Okay, and of course, one of the main caveat is that it has to be approved and regulated and from the central bank point of view. Okay, we can go to the next slide. So there was some initial, of course, I think Hada Bank was the first bank which started to go on the blockchain technology. It was somewhere in 2018, but I have a strong feeling, and if I'm not mistaken, now this no longer exists, because I think they have some challenge and all. I think so they closed down. But again, that's something I'm not so sure. But this was the first bank which made a very big hype in 2018 when they were talking about using blockchain, the Islamic bank, which is totally digital and going to be using the blockchain as a technology. Then, of course, there are other banks like Al Raji and Stella. So these are the banks, like they're trying to use Ripple. Now, Ripple is very well being adapted and practiced by a lot of banks using their blockchain technology to make the money transfer or for the liquidity purpose as well. Okay, we can go to the next slide. So moving ahead, what we can see from the remittance point of view, of course, yes, it's still debatable on the cryptocurrency, but I think blockchain technology is definitely being acceptable and being widely being practiced. And again, as we know, we are talking about CBDC, which again, I did not cover much on the CBDC in my slide. Now, CBDC is another way which is picking up by a central bank is coming up with their own digital currency, which is going to be backed by a blockchain. And that is the new model which is going to happen for doing the so-called cross-border transfer. I think within a span of 3 to 5 years, we'll see most of the banks will move into CBDC. And then thanks to the COVID, the digitalization is picking up even among the migrant workers. They're getting now having more digital awareness, or they're getting more, the literacy is going up on usage of the digital channels. So I think, and again, it brings more trust and transparency. So we can see that more and more the players are also trying to offer the hybrid model, if not the complete digital model of doing the remittance, because there may be some, as I said, right, when it comes to remittance market, largely the first thing the target customer base comes to mind is always the remittance or the migrant workers, because they may be still not having access to the bank accounts or maybe to the wallets, and where they are still receiving their salaries or day-to-day wages in form of cash. Okay, so basically this the idea is to remittance is a very good financial product and service which is toward the financial inclusion. So basically the idea is to make sure the banking for all, so even for the underserved also they have access to this kind of service. And again, this is evolving. Now we're talking about wallets, which is there's a fusion of remittance and wallet which is happening across all the globally, where the players are trying to offer this service, where they can even offer payroll service using the wallet, where the funds can get credited, and end of the day, they have flexibility on the fingertips. They can do the remittance on their own using the digital services. Of course, when it comes to the digital or cryptocurrency from the Islamic finance point of view, okay, whether on the permissibility, still there's a research going on to how to control the elements of Garar. So that is something something which is still under argument or under debate. But on the other side, there are a lot of regulatory bodies globally. There are a lot of sandbox, and the FinTech Hive, the innovation program has been coming up, where they're trying to come up with a remittance model or the cross-border payments, which can allow with minimal so-called intermediaries. We can call it disruption models. Where the benefit can be passed to the sender, by giving them a lower charges or the better rates or the better speed of processing the payment. So this is how basically the remittance industry, which I can see is getting evolved, and I can see more and more players now they're trying to go and trying to catch up with the digital waves, and especially when it comes to the fintechs, they have to compete with the fintech players who are coming from globally also and trying to penetrate across the globe as well with their digital apps, to offers like, for example, as I gave example of Wise or maybe the Remitly. So they're also trying to increase the competition, or they're also trying to lead the market on the adoption of the digitalization. So this is all from me. Okay, I think yes, I went a little bit slightly more fast, but I'm more than happy to get the questions from anyone. If anybody has any kind of queries, please feel free to ask.
Thank you very much, Mr. Lokesh. It was a very important and wonderful session. I think our uh, online guests and participants have benefited from this very important session, and we are going to share with you the slides, inshallah. So you can download it either from the chat group or maybe from our platforms in Facebook and Twitter and other groups, WhatsApp groups as well. So now we uh, open the floor for any question or comment. So if you have any question or comment, you may ask. You may either write in the question box or you may raise your hand so we can switch a microphone for you. Dr. Ihab, perfect show, thank you. You are most welcome. And Dr. Brown, you are most welcome as well. There are many comments, appreciating a comment as well. So, yeah, okay, we got few hands here. So we are welcoming Mr. Muhammad. You are welcome. Please, you may speak now.
Assalamu alaikum.
Walaikum.
I have two questions.
Brother Muhammad, your voice is not clear.
Okay, again, this is okay. It's okay now?
Yes, yes, please.
Yes. Okay. Hello, Mr. Dr. Muhyiddin and Dr. Lokesh. My question, how customer or client ensure that their transfers, especially from Gulf area, for example, to Egypt or to other country, doesn't have a double fees. For example, if I'm going to transfer money from Saudi Arabia to Egypt, okay, the bank here is taking its fees, and in Egypt also there is additional fees when receiving money there. How we can jump over this thing?
Good question, Mr. Mohammed. As I mentioned, right, I think when you're sending the money, you may be sending using a banking network, or you're using bank to send money. So normally banks, what they do is they have to leverage on the SWIFT network. So when in the SWIFT network, there's something called lending charges. So lending charges are the one which you're paying at the Egypt from the recipient side. So not to say to avoid, okay, so the other models which are available in the market is something called MTO, money transfer operators. You know, for example, let's say, I'm sure you may have heard of money transfer operators like MoneyGram, or maybe like Western Union, or even now the digital model, which I mentioned about Wise or Remitly or Neum, okay? So or TerraPay as well, which is getting very prominent right now in Middle East market as well. So these are the people, normally they try to process transaction. They have their own agent network spread across globally. So what happened is they tried, I cannot vouch for everyone, but normally what they do is they try to do the transaction in such a manner. For example, when they are charging, let's say if you're being charged in Kuwait, let's say some 10 Kuwait dinar, let's say. So what's going to happen is in the 10 Kuwait dinar itself, they will take care of the fees of the agent who is there in Egypt. So normally there's a ratio of 30, 40, depends upon it, you know. And then they may also share something with the agent also in Egypt on the FX margin, which they want to share. So this model, if you ask me, right, the MTO model is more like a collaboration model. It's a good example where actually there's a very good understanding that fine, from the FX spread, I may take 20% commission or 20% margin. And from the charges, I may take 30% margin. So in that case, so the receiver will not face or they will not have to pay anything on the lending charges.
Okay. Okay. Thank you, Mr. Lokesh.
You're welcome anytime, please. Yeah.
Thank you. Thank you, Mr. Lokesh. Now, Brother Muhammad Jidda. Yes, please.
Assalamu alaikum.
Walaikum Assalam.
First of all, I would like to thank Lokesh for the wonderful presentation and one of the best presentations that we've been waiting for a long time to happen. So basically, my question is a good case and example in Malaysia.
Sure, please.
Yes. I am based in Malaysia for a while, and we get challenges in sending or receiving money from Africa, specifically Nigeria. So what
Right.
advice, yes, what advice can you give as an expertise in the field? And what is the best solution that we can use to send or receive money from Nigeria? Thank you so much.
Okay, that's a good point. So it all depends upon the, as I said, right, they have to appoint an agent. So that's a very good point which you mentioned, because from normally to send from Malaysia to Egypt, sorry, to even to Kenya or any other African continent, right? I'm sure you can use MoneyGram, and Western Union can be used. They already have a network over there. But yes, the charges may not be that attractive because, of course, they may be charging a bit high. But on the other side, like if they are remittance players, I don't know how to assist you over here, but I can just say this much, the customer or maybe the agent or the company you're using in Malaysia to send the money, you can request them to have a direct agent or direct partner in the subcontinent over there to process the payment. Then definitely the processing will be faster and the charges will be lower. Maybe because because when you want to set up an agent or do a collaboration, there are also some charges involved. Let's say, for example, if I want to tie up somebody in Africa or maybe in Kenya or somebody, right? So I need to place my funds over there, and I need to agree on some charges. And of course, I may not know anybody directly over there. So that also could be one of the challenge. But end of the day, as I said, it's all about collaboration. If there's a legitimate institution over there being regulated by the central bank on the other side, definitely the collaboration can easily happen. Should not be a problem. It's just knowing those. Maybe if you can tell the company that you are using this particular bank always for making a payment, maybe they can try to contact them to set up a network direct, rather than going through multiple intermediaries, where actually you end up paying more higher charges.
Thank you very much.
Sure.
Brother Bo Abdullah, I would like to specialize in depth Islamic economics. Can you help me by introducing me to the Islamic Economics Club that offers lesson, lectures, and training via Zoom? Yes, Brother Bo Abdullah. Yes, you can refer to our announcement in our page, Facebook page, and also in Twitter. Nadi Liqtisad Islami in Arabic. If you write in Arabic, Nadi Liqtisad Islami. So you will see there every day we have programs in Arabic, and also on Thursday we do have English program. So you also can join in Arabic sessions. We cover various types of titles and topics, and we try to cover all the topics of Islamic banking and finance, Islamic economics, marketing, digital marketing, and also fintech, debt management, all specializations we are trying to cover, both in Arabic and English languages. So rather than Thursday, you will see we do have programs in other days in Arabic, and on Thursday we do have English program. I mean program in English language, but we cover same topics of Islamic banking and finance and marketing. We do have also a skill program on Sunday and on Tuesday. So we try to conduct training and workshop in numerous skills we try to provide to the students and also researchers. So you may refer to our pages and also in the website. We do have also website. If you write Nadi Liqtisad Islami, it will automatically come to you, inshallah. Thank you very much. So if there are any other question from the online guest, can I speak the Brother Isam? Yes, please. You may raise your hand, please. If you raise your hand, then I will turn on microphone for you, Brother Isam. Yes. Okay. Yes, brother Isam, you can speak now. Yeah. Brother Isam.
Sorry. Assalamu alaikum.
Wa alaikum assalam wa rahmatullah.
I am very happy to have this debate of the transfer of the money. But the question here is about the doctor, how he think for how long year it takes place for the digital currency. As he mentioned that this is not been a guarantee till now, the Bitcoin and etc. like this. Did he think for how long that this currency would take place to be for transmission to from, as to be, approved? This is my question.
Okay.
For how long? For how long this is what takes place? As you mentioned that this is as according for the Islamic, way, is still not to be guaranteed. The Bitcoin and etc. like that, the digital transfer.
Good point, actually. Okay, of course, from the Islamic perspective, I only can share my views, but I'm sure Dr. Mohiddin and others will be in a better position to comment on that part. I think more and more countries are getting into CBDC. The way I look at it, the digital currency or the cryptocurrency, because of course, I will not say, maybe some may agree or not. I think it was a bubble, the bubble was formed. A lot of people have invested. Now, as you can see, the currency has gone into totally depreciated, and a lot of people have lost their money. And of course, some people have made their money as well. So now what is happening is confidence level is not there at all. So which is there, so in a way, sorry, carry on, please. Yeah.
Yeah, the secure, as far as that we've been hearing for many scholars, Islamic scholars, that they don't look it as a currency, real currency,
Correct.
and there is a very big, risk to guarantee this currency. This is the things that came to my mind, that you are saying that now all as a global, thing that it's for, we will see in the future, maybe people will not, go through the cash money, rather to more maybe to deal with this digital currency.
Correct. But I think maybe I did not complete my sentence at the time, or maybe I missed out. What I was trying to say was, when I'm saying going to digital means, I'm talking about CBDC, central bank digital currency. I'm not talking about cryptocurrency over here. Cryptocurrency, for example, the only one which is doing again, because of Ripple. Okay, so Ripple, because they're more token based. They're not like a cryptocurrency point of view. So what is happening is it's more like a token. So which is basically, it doesn't fluctuate that much based on the so-called the market volatility. But when we come to CBDC, it's going to be similar like the currency which we have. Like, for example, maybe the Kuwait Central Bank come up with the Kuwait dinar, which is like a crypto, or maybe called digital, instead of called KWD, they call it Kuwait digital dinar. Okay. So in that case, the volatility is not high. And again, it's being regulated by the central bank. Okay. And on the other side, the confidence level will be there. And the trust is there, because the settlement will be taken care by the central bank.
Yeah. Oh, okay. Thank you very much.
Yes, please. Welcome.
Thank you very much. Thank you.
And Brother Isam, you can also visit our link, our platform in YouTube. If you write there, cryptocurrencies from Islamic perspective, we conducted few lectures. Maybe one of the lectures was conducted by Dr. Anwar Misbah Sobra from Lebanon. He is also expert in Islamic finance, Islamic banking, and also in cryptocurrency. So he talked about cryptocurrencies from Islamic perspective. So you may just go there, that platform, and listen to the lectures. So you will have enough ideas and also information, I guess. Thank you very much. So if there is no more question, we can end the session. Or okay. Mr. Lokesh, you Ahmed, maybe. Okay, we have brother Ahmed. Yes, please. Yeah.
How are you?
Yes, I'm fine. Please, thank you.
I'm so happy to be among of you, and it was an interesting session. And I'm asking about what is the thinking of Islam about the crypto money. This nowadays many use in Africa and around the world. They practice that, and I want to understand the the thinking of Islam on that. Thank you so much.
Welcome, Brother Ahmed. Just now I mentioned that we conducted few lectures on cryptocurrencies. You just visit our platform in YouTube and you write cryptocurrency lectures. So it will automatically come to you and you can listen to the lecture. It was conducted by, I think, more than 3 lecturers. One of them Dr. Anwar. So you will have enough idea there. So that is another lecture with another topic. So you are most welcome to listen to that lecture and you will have enough idea, I guess. Thank you very much. And Mr. Lokesh, if you have any comment on that?
No, I'm fine. Just yes, you're right.
Okay, thank you. Thank you very much. So what are IBAN and BIC codes? Many thanks and appreciation to you for that. Okay, thank you. Brother Saleh is asking what are IBAN and IBN and BIC codes?
Okay, these are basically the IBN is international bank account number, and then BIC code is like bank identification code number. Normally it's being used for SWIFT.
Yeah.
Yeah, so it's mainly used for SWIFT. Basically, so when you're sending any transaction, right? So when you're sending message from the sender bank to the receiver bank, right? So you will have to follow the standard as per the SWIFT message. So this is where you have to mention all this IBAN, bank identification, because they have a code for each bank. And then IBAN is an international bank account number.
Yeah, some of them using IBAN, some of them using SWIFT. I think
Yes.
just, yeah, thank you. Brother Adama Omar, yes, you're welcome, Brother Adam, please. Brother Adam Omar, I think you have something to say, please, yeah.
Hello.
Hello, yes, Brother Adam Omar, please, you may speak now.
Hi. Okay. We welcome the prof. My question is: in Africa, Malian people, especially the Islamic financial model is not as developed in us. And what advice may you give us, please? That is my question.
Mr. Lokesh, you got the question?
No, can you, this I was about to ask, can you please repeat the question? Sorry, I didn't get it.
Brother Adam? Or can you write the question in question box?
Hello?
Can you repeat the question, please?
I said in Africa, especially in Mali, the Islamic financial model is not as developed in us.
Okay.
And what advice may you give us, please?
Okay. Thank you. Yeah, Mr. Lokesh. Yeah.
It's a very, very generic question. So the advice point of view is, again, it all depends upon what kind of services or products which the customers are looking for. I'll put it this way. Because at the end of the day, if you want to offer Islamic banking products and services, you need to understand what kind of products or maybe what are the existing products from the conventional perspective. Then of course you can offer a better products from the Islamic perspective to them. And then second is definitely it has to be regulated by central bank. And on the top of the regulated by central bank, you also need to be governed by the Sharia supervisory board as well. So if you want to launch, okay, maybe if the question is, if you want to launch an Islamic banking product and services in your country or in your city, so of course you have to have a financial institution which is governed by a Sharia supervisory board, and then it's being regulated by the central bank. And then you will be in a position to offer, then of course you need to have product expert who understands the Sharia aspect of the Sharia aspect, and also from the demand of the consumer as well on the financial product and services as well. And then can offer a product which can meet their requirements. But it's a very broad question, very difficult to I can give any perspective, but again, it's a journey, So in the journey, of course, starting from the legitimate institution, then again being regulated, then being governed by Sharia supervisory board, then launching the products which are in compliance with Sharia, then it has to be governed by the system again, or basically using the system. Then again, most likely today we're not talking about brick and mortar base, we're talking about digital banking then. So that will be the better way to launch the product is the digital mode. So where you can come up with the digital Islamic banking products, and I think that could be the fastest way of penetrating into the market where the Islamic banking is still at a very early stage. And it is just my individual thoughts about it. Maybe Dr. Mohideen, you want to add something?
No, thank you. I think it's okay. As we know, there are many students from Mali. They are studying in Malaysia, in Bahrain, in even Medina University. So we know many students are being expert in these fields, in these areas. So I think they should take some initiatives, and they should propose Sharia compliant products and Islamic financial institutions, and they can also encourage other institutions, conventional institutions, by proposing some Sharia compliant products and also practices. So I think just they need more experts and more people to take action, to take initiatives in the countries, and then I think it will be day by day and step by step developed, more developed in Mali, I guess. Like in Bangladesh, in Indonesia, and in other countries nowadays, even in Japan, in South Korea, they are also practicing Sharia compliant Islamic financial practices and also products. They are trying to develop more. So why not in Mali? Yeah, this is, I guess, in my opinion. Yeah, Brother Adam, thank you very much for the question. I think there is no more question. So on behalf of Nadal South Islami, Kuwait University, would like to thank all the participants and online guest students who joined in this platform, and also from the classroom. Thank you very much for joining us. I hope to see you in other upcoming sessions, inshallah. And our special thanks to Mr. Lokesh Gupta for your valuable time and effort for this wonderful session. As usual, we hope to have more sessions with you in the near future. So thank you very much, Mr. Lokesh. So if you have few words, please.
Yeah, sure. So thank you everyone for joining this session. I'm happy if you are able to, if all of the participants are able to understand on the remittance perspective, on the remittance business model. And I'm happy to take any question. Maybe you can drop me an email as well. End of the day, we are sharing knowledge, and it's good to learn also how the market is evolving, because payments are the thing right now. And a lot of attraction from the industry point of view as well is happening, especially in the cross-border payments. More and more fintechs are coming in. So my objective was to share more on the practical aspect of it. So at least you are familiar with it. Some of you maybe want to looking for so-called career in the area of financial payments and all. I hope my presentation would have helped you in having an understanding of the basic models. Okay. So time was short, but I tried to keep it as much simple as possible for everyone to understand and learn. So thank you everyone again. So thanks for having me on board as well to do this presentation to you guys.
You're most welcome, Mr. Lokesh. Okay, lastly, we would like to thank our Director General, Dr. Al Ubaid, and other staff experts in Nadal Iqtisad Islami for their continuous effort. So thank you very much, and we will see you again soon in upcoming session. With that, we conclude today's session here. Subhanakallahumma bihamdik, ashhadu an la ilaha illa anta, astaghfiruka wa atubu ilayk. Assalamu alaikum wa rahmatullahi wa barakatuh.
Okay, thank you everyone. Bye.